All right, good morning. Happy Saturday. Hope everyone is having a good day so far. I'm going to begin our presentation today, how to manage your portfolio in 10 minutes a day. That 10 minutes a day could be 10 minutes a week, depending on the strategy you employ. We will walk through the process with you today to show you how all the pieces of stock scores fit together. And that's really my goal, is to walk you through the processes and the tools that stock scores offers for investors. So I'm going to focus more on the type of work we would do to pick stocks for your retirement portfolio, as opposed to trying to make a career out of day trading. We'll talk about day trading and active trading and other presentations this month. Today we'll focus on investing. We're going to kind of go through the basic theories of entry, exit, risk management, and investment management within the stock scores framework. I'll show you the stock scores education center and really take you through 7 steps that you would use to use the tools of stock scores. All right, so hopefully that sounds great. I just want to make sure everything's working before I continue. I am recording today's presentation, and we'll upload it to YouTube either later today or tomorrow so that you can watch it again. All right, so let's get into what we wanted to do today. Step 1, knowing what to look for. So as I said at the top, one of my goals is to show you how the different things that I've created in the Stock Scores website fit together. And we're going to start with kind of the thing that I tend to talk about last, which is the Stock Scores Education Center. So within the Stock Scores website, we have an area called Education. I can click on that, and there I have a number of lessons. We've got getting started lessons for the first-time visitor to the Stock Scores website. This has got a little bit of background on my approach to investing, active trading, how the stock scores indicators work, a tour of the website. You can see all the different titles there, basics of charting. These are all free videos that you can watch from the Getting Started menu. Then we go into the foundation area. This is the theory that you should understand in order to apply my strategies. So how do you read a chart pattern? What are some common ways to know when to sell a position? How do you manage risk? How many shares should you buy? We'll talk about that a little bit today. What is this concept of the expected value of the trade? When would you scale into a position? What's this idea of time frame confirmation? How do you develop a new trading strategy? So all of those things and more are covered in the foundation area, and each one will have a written lesson. They will have a video, which you can play from your iPad, from your computer, from your phone, as long as you have internet access. It will have an assignment, so you can test to make sure you understand what I have taught you in that lesson. And then it has a multiple choice test to make sure that you understand those concepts. All right? Once you understand the theory, then you are ready to learn strategies. And so for the investor, we have 4 strategies here, plus the exit strategy, so knowing when to sell. So what we're going to talk about a little bit today is the Stock Score Simple strategy. We'll do that daily, weekly. We'll see as we go through the presentation. We may alternate between the two. But again, there's a written lesson and a video explaining that strategy. And our focus today will be on investing. Now, there are also strategies for active traders, for those who want to make a career out of trading the stock market. We have videos and lessons focusing on my day and swing trading strategies. All right, so that's all in the Education Center. Once you have that understanding, then you are ready to apply the processes that I'm going to show you today. But that is step 1. Step 2 is to set up the charts. Now, Stock Scores has charting for all North American stocks, or most North American stocks, ETFs, that sort of thing. We don't cover commodities. We don't cover markets outside of North America. But for a Canadian or an American investor, we have everything that you need. How do you set up the charts? Well, that answer depends upon the type of strategy you are using. So if we go back to the investor area in the education section, you'll notice here I've got the Stock Score Simple Daily and the Stock Score Simple Weekly. If I was applying the weekly strategy, then I need my chart to reflect a weekly chart time frame. If I'm doing the daily, I want it to reflect a daily chart. So let's now go into a chart. I'll pull up a chart of any old stock. Let's pull up Microsoft. I do that by entering a symbol in the top right-hand corner of the website. And there I have a chart of Microsoft. Now you should see that this is a 240-day daily chart. All right, that basically is a 8-month daily chart. That means each one of these candles on the chart reflects a day of trading. And then we have the volume down at the bottom. So that's the amount of stock that traded that particular day. And then we have here the stock scores indicators, which we use for many of our position trading strategies, longer term strategies. All right, so that is a 240-day daily chart. If I wanted to apply the weekly version of this strategy, let's say I only want to look at the market once a week, Saturday afternoon, I'm going to give 10-15 minutes to my process to look for stocks to put in my portfolio. That's fine. You're just going to apply a different strategy. So then you're going to go into the chart tab, which is below the large chart, and we're going to change interval from daily to weekly, and we're going to make this a 3-year chart. Click on Create Chart, and we now have a 3-year weekly chart. And again, you should notice that up in the top left, now it says 1,095-day weekly chart. Each one of these bars or candles represents a week of trading action. That is a week's worth of volume, and there you can see how the stock scores have progressed over the last 3 years. Hopefully you'll notice that when the stock was doing well, like here, the stock scores were up above 60. And when the stock was doing relatively poorly, like there, the stock's scores were much lower. And so that's the goal of the stock scores, is to help us avoid bad stocks and focus in on good stocks. All right, so that was our second step, which is setting up the charts to reflect the strategy you are using. Step 3 is to now scan the market. So this is the process that you're going to employ either daily or weekly. Again, you can do it once a week for the Stock Score Simple Weekly strategy, or you can do it daily for the Stock Score Simple Daily, the Abnormal Breaks, and the Bottom Fishing strategy. All right, so we're gonna, since I set up my charts for weekly, we'll run the process for the Stock Scores Simple Weekly strategy. We'll apply that to the Canadian market. What we want to now do is go back to the Stock Scores website, go into the Market Scan tool. So I select Market Scan from the Tools menu, and I'm going to select the Stock Scores Simple Weekly for Canada. And I'm going to run the report. It found for me 45 stocks that meet the criteria of that strategy. What I now need to do is go through the charts of those stocks one at a time to see if they have the right pattern. All right, now, what am I looking for? Well, that is what is taught in the investment strategy section of the Education Center. Remember, we started with the Education Center. Under Investor, I read that lesson, I watch the video, I know what to look for in the chart. And then it's simply a matter of using your left mouse key and right mouse key to cycle through the charts back and forth one at a time, just like a slideshow. That's why we call this the slideshow viewer. Now again, notice that I am looking at a weekly chart because I set my chart earlier when I pulled up that Microsoft chart. I had set my default chart time frame to a 3-year weekly chart, and it remembers, the website saves that as a cookie, and it knows that now on all the charts I'm going to look at are 3-year weekly charts. All right, now this particular one has a pretty good pattern. This is called a pennant pattern. Trend up into the pennant was up. We got a breakout from the pennant actually 2 weeks ago, but it hasn't gone up a lot since then, so this is still a valid setup. I would rate this a 7 out of 10. So Ithaca Energy, I'll give that a 7 out of 10. And as I go through these charts, I'm looking for very specific patterns that I'm taught to look for in the lesson. All right. So this particular one, we're a few weeks late on it. It made its good chart pattern back there, probably about a month and a half, 2 months ago. Stock scores were above 60 and 80. We had a break from a little rising bottom here. This is a downward trend line, was broken here, built a rising bottom, break from a rising bottom, and this stock now looks likely to continue higher. Would I buy it today? It's okay. I feel like I'm about, 30 cents too late. The entry signal price was at about $1.20. We're now at a little over $1.50, so it's a little bit late. Let's see if we can find something a little fresher. So as I go through these, I very specifically know what I'm looking for. And when I see it, I'll stop on the chart. Surge Energy is actually a stock that I think I featured in the weekly newsletter a few weeks ago. It's got the right kind of pattern 2 weeks ago. Hasn't gone up a lot yet. It's up maybe 20 cents a share. So this one's pretty good. I think this is a stock worth considering. We're just a little bit late, but not too bad. All right, so I'll continue to go through these. This one's pretty good, Canacol Energy. I'd give this one a 7 out of 10 today. That's CNE on the Toronto market, Canacol. A little too late there, but you might remember that I discussed this stock. I wish I could remember where it was. It might have been in my weekly newsletter as well. But one of the maybe one of the webinars I did a couple weeks ago, because this was I think that's what it was. So if you go look at some of the videos from a couple of weeks ago on the YouTube, Stock Score's YouTube channel, I think this was the stock that we discussed at some length 2 or 3 weeks ago when we were doing these exact same scans. All right, Bonavista Energy looks good. Again, a little late. A lot of these energy stocks were probably 2 or 3 weeks late. Haven't gone up a lot yet, but would have been better to buy them 2 or 3 weeks ago because you'd already be up 5 to 10%. On some of those trades. All right, so this is the process. And I do this, oops, that was pretty good. Ensign, I like that one. Again, last week was the break. Still, this week is pretty good. So if you have, 10 minutes on a Saturday, you've learned the lesson, you understand what to look for, you've practiced. It does take some practice. You'll notice I'm going through these charts pretty quickly because I've done this a little bit, so I know what to look for. It's like second nature. And as you practice more and more, it gets quicker. When you start doing this, you're probably going to look at the charts this long. And you're going to really think about it. And you're going to say, you know what? There's a stock that was in a downward trend. All right, the sellers were in control since basically 2014. The downward trend was broken in July. And we're now starting to see a little bit of abnormal activity, abnormal volume. Our stock scores are getting better. We had a little bit of a break 2 weeks ago. Looks to me like this stock could start to make a recovery. It really has been beat up. It was at $90 in 2014. We're now down around 25. Looks to me like it could start to make a comeback. I'd give this one a 7 out of 10. Why is it a 7 out of 10? It's not a perfect pattern. It's a little bit choppy into this. It has a lot of overhead resistance to work through. A lot of people own this stock at higher prices, and their goal is to get out at break even. That's the way people think. If you bought it at 50 and it's at 25, you're thinking, please just let it go back to 50 so I can get out at break even. So that tends to slow the upward move of a stock that has to overcome that pessimism. That's why I don't give it a great, 8 or 9 out of 10. It's a 7 out of 10. All right, Prairie Sky, this is a stock I featured in the weekly newsletter last week, doing this exact same process. And it's got the great pattern. The only thing missing on Prairie Sky was a little bit of volume shortfall. But other than that, I like this one to hold for the next little while. Pays a decent yield as well. Okay, so almost every stock that I've highlighted as being worth considering has been a oil and gas stock. And it's really been the leadership area of the market the last 2 months, 6 weeks, which is kind of weird to say because it's been obviously the underperformer in the market for a number of years. But in the last few weeks, it's been the leader. All right, so we've just gone through 45 stocks. That probably took 5 minutes. I went through fairly quickly because I didn't want to spend a lot of time on that topic, but you get the idea. Now, if I wanted to do the daily version of that, well, first thing I have to do is change my chart time frame back to daily. So I call up any chart, call up Microsoft, go to the chart tab, make this a daily chart, going back 8 months, and click on Create Chart. And there I have a daily. Now when I go into my market scan, I can select the Stock Score Simple Daily for Canada, so Stock Score Simple Canada, or I could do the US. Let's do the US this time. Run the report, and it finds 33 stocks for me to look at. Now, if I'm really good at this, if I practiced a lot, instead of going through the charts one at a time, I can use the gallery viewer and go through these charts much more quickly because there are 10 charts plotted per page. And if I see something that I like, I will stop on it. So I'm going through these pretty fast, obviously. I just want to keep our presentation as short as I can today. Go to the next 10. All right, and there's just a very specific few things that I'm looking for, and you learn those things in the lesson. So this one's not bad. This has a break from what's called a ascending triangle pattern. So there's the ascending part. Here's the triangle part. And on Friday, we broke out through resistance with abnormal volume, stock scores in the right place. We've got optimism because each one of these bottoms is rising from left to right. All of the things that I look for on a daily chart are there. Now, I also like to look for time frame confirmation. So I'm going to look at a 3-year chart. I can see from the 3-year chart that the next level of resistance is up around $30. We're at about $21.66, $22, let's say. It's called support, just under 20. So I've got to make sure I've got 2-to-1 reward for risk potential up to this line, and I do. Okay? So now we can go through the next section in our process here. Number 4, we've done number 4, identify stock. So let's use the stock that we just found, which is GMLP. All right. Now we're going to do risk management. How many shares to buy? How do you sleep well on the stocks that you own? So let's go back to GMLP. And I'm actually going to call up a large version of this chart just so that we can see all of the details. So GMLP. There we go. Now, if I'm going to buy this, let's say I found this just before the close on Friday. It was at $21.66. So let's call that my entry price. Now, if you go out to buy this stock on Monday, it could be 22, it could be 21.50. So you would do this calculation at the actual time that you were purchasing it. But let's use 21.66 as our entry price. The next thing we need to do is determine what is our stop loss point. And the way I do that is I look for where did the stock stop going down and start going up. There you can see it was going down for a few days, and it stopped going down and started going up basically at $19 a share. My entry price here is at $21.66. So we have support at 19 and we have entry at $21.66. Now let's go into the risk manager. So we're going to go back to our tools, go to the risk calculator. We're going to put in here the entry price of $21.66, stop loss price of $19. And now we have to determine how much we're willing to risk on this trade. Do we want to risk a percentage of our account? We may say, okay, I have a $100,000 retirement savings plan, and I'm willing to risk 1% of that, and I pay $20 of commission in and out. So I click on submit, and it tells me that I can afford to buy, and it's a little small here, so I'll circle it, 368 shares, which we would round off to 370 or something like that. What that means is that if I buy the stock at $21.66, and let's say bad things happen and it falls down to $19, and I sell at $19 because that's my stop loss point, I'm going to lose $1,000 because I'm buying 368 shares, and that represents 1% of my portfolio. Now, another way to do it is instead of doing a percentage of your portfolio, just pick a fixed dollar limit. You may say, I don't want to lose more than $500 on any one trade. No problem. It now tells me I can afford to buy 180 shares using a $500 risk tolerance. All right, so that's how the risk calculator comes into the equation. And the use of the risk calculator and risk management is taught in the education area under foundation in the risk management lesson. Okay, that concept that I just touched on the basics of it, there's more detail, more in-depth discussion in that risk management lesson. You have a written part, you have a video, which you can watch. It's 13 minutes and 45 seconds long. And in that video, you will learn, in a lesson like I'm doing today, how to do risk management. All right, I've touched on the high points for you there. All right, let's go to step 6. Track your trades. So now, once you start to build your portfolio, you need to watch them because you need to look for entry exit points. So let's jump back to stock scores, go to the tools menu, and there's 2 tools that are useful here, the portfolio creator and the watch list creator. Let's use the portfolio creator first. Let's create a new portfolio. This isn't my portfolios. I don't have them in this demo area. So we're going to go add a portfolio, and we are going to add GNLG. Oops, sorry. I'm going to call this this portfolio name will be October 15th test. Okay. So our stock is GNLG. We're going to buy 370 shares at 21.66 with $20 in commissions. Save changes. So now it has done that for me. Did I get the wrong symbol? I might have. GNLG. Oops. The GMLG, wasn't it? Now I can't even remember what the stock was that I was looking at. Someone help me out. What was the stock that I was looking at? I've got a great memory, but it's short. Just checking here. GMLP. Thank you, guys. All right, so let's go back. Now, this is a good demo. We're going to edit a portfolio because that stock doesn't even exist. So we'll go into October 15th test, and instead of this being GNLG, it is GMLP. Save changes. There, now it's working. So it shows that as of right now, I am down $20. Why? Because I had $20 in commissions, right? Now, as time passes, let's say a week from now, it's at $25, it'll show that in the portfolio manager. So this is a great place to build your little portfolios to monitor. Now, the reason you do that is because it then interfaces with our chart viewers. If I go back to the slideshow chart viewer, I can select a portfolio to view. So I can go into October 15th test, and it shows me that chart now. So I can now keep watching and checking it to make sure that I've not seeing an exit point or that kind of thing. What is that? How much time does that take? It takes 30 seconds a day. Go into your portfolio, or if you're doing this on a weekly basis, check your portfolio. Is there a sell signal? If not, stick with it. Okay, we'll talk about exit signals in a moment. All right, so that's how those tools work. Now, the difference with the watch list creator is you don't actually enter in any price information of what you paid for it. It's just a way to build a list of stocks to watch. So I can call this October 15th test as well. I can put in GMLP and click next and then submit. And so now if I go back to my slideshow chart viewer, it'll be under watch list. I can take a look at October 15th test, and that chart comes up there as well. Okay. Now, with one stock, I mean, obviously you can just enter in one symbol at a time, but if you own 10 or 15 stocks, or if you're monitoring a list of stocks, it's all within these tools to be able to look at the charts quickly, and that's helpful. You can also view them in the gallery viewer, so you see the smaller version, and again, if I had 10 or 20 stocks in my portfolio, I'd see them all laid out here so I could get a real quick sense of how those stocks are doing over time. All right, final step, step 7. The exit decision. Stick with your winners, get rid of your losers. The basic idea is that if this stock falls down below support at $19, I'm going to cut it loose. That's getting rid of your losers quickly. If, however, it continues to go up and goes up and up and up, like, what's an example? Well, let's go back into here. I'll just do all Canadian stocks. Let's look at some of the top performers. So let's look for stocks that are up at least 40% over the last 60 days, that trade at least 500 times a day. And you're seeing now some of the usefulness of the market scan tool helps you to look for a whole bunch of different things. So let's look at some of these and see how their trends have developed. So here we have a stock that had an entry point using the strategy, the daily strategy that I just showed you, had an entry point right there, and it just keeps building rising bottoms. There's no reason to exit this trade yet. But if it were to break this upward trend line or move down through one of our reward for risk lines, then you would have an exit decision. And so if you own, let's say you own these stocks, you'd be lucky to own all of them, that'd be great. Then you've got a quick way to determine whether the trend has been broken. Look at this stock. It has been in a steady upward trend for all year, basically. And you can see I can draw a trend line. And look at that. It doesn't violate the trend line. And those are some of the rules that we can use to determine when to exit a trade. And so again, if we go into the Education Center and go down to Investor, there is a lesson here on the investor exit decision. And we have different methods that we use. We can use patterns. The method I really focus on in my teaching is something called the risk multiple method, where we look at multiples of risk reward to determine where support is to determine when we exit the trade. You want to learn that lesson, you learn it here in the Education Center. All right, so that's how it works. Now, if you want to take this to the next level, let's say you want to learn my theories, my strategies, that sort of thing, you can do that. The alternative is to try and do it on your own. It took me about 8 years and a lot of expensive lessons to learn what I needed to know to be able to profit in the market. I was about 8 years before I was really, extremely profitable in the stock market. What I've done is I've taken really 25, 26 years of lessons, because I've been trading for, gosh, it's now, going on 26 years, 27 years. So I've taken all the lessons I've learned over the last 27 years, and I've put them into my Education Center so that you can learn those things, save yourself time, save yourself money from mistakes, from missed opportunities, that sort of thing. So those are your two options. Either figure it out on your own. Some people like to do that. I mean, that's what I like to do. But keep in mind, when I was learning how to trade 25 years ago, there weren't the sort of books and resources that you see available today. Or you can have someone else teach you. I think that's the smart thing to do. You'll have to decide that for yourself. The Stock Tours Education Center, as I've shown you, is broken up into 4 areas. We have the Getting Started area. Then we have the Foundation, which is the theory that you need to understand in order to apply the strategies. And then you have the Investor and Active Trader areas, where you have my actual rules for when to buy, when to sell, and how to manage risk. Foundation, you access that right online. You can do it from your phone, from your iPad, from your computer. There's, I think, a dozen lessons, maybe more. Some of them are longer, maybe 45 minutes is the longest one. I think the shortest one is around 10. So I've tried to keep it as concise as possible. Most people can get through all of those lessons in a weekend. It's not that demanding, but you need to understand those theories so that you can then move to the strategy. So when you take the Investor course on Stock Scores, you get access to the Foundation lessons, plus you get access to my investor strategies, plus you get access to the Stock Scores Investor Market Scan. So if we go back to the Stock Scores website, go to the Market Scan, there are these scans here which you have access to if you are an investor student. If you're not an investor student, you don't get access to those. You get email support from me, and you can renew your access to Stock Scores for $300 a year. You get 6 months free with the course, and then it's $300 a year to continue to use the tool. And again, you can choose to use the tool once a week or daily, or you maybe do it every day for a little while, and then you take a break and you just sort of hold on to your holdings and don't buy new ones. It's up to you. But to use the tool is $300 a year. For those who take the Active Trader course, again, you get access to the Foundation lessons. You also get access to the investor strategies. But in addition to that, you get access to the Active Trader strategies. These are strategies for day and swing traders. Market scans, access to the investor and the Active Trader scans. Email support from me. So when you have a question about the material you're learning, maybe you see a stock that you want to get my feedback on whether you have applied the rules correctly, fire me an email. I'll help you with that. 6 months access to the tool, again, renewable at $300 a year. And the one other thing that's very important, which I haven't shown you today, but you also get my proprietary real-time indicators for a program called TradeStation. So I'll touch on that in an active trader presentation, or you can go to the Learn page on the StockScores website. There's a video there that explains what I'm talking about there. We're not going to cover that today, but I'll do it in a future lesson. All right, now I'm also going to complement all of that with some live sort of real-time training. So on Saturday, November 12th in the morning, we're going to do a foundation review. We're going to go through all of the important concepts of theory in the foundation together so that I don't have to worry that you've procrastinated and haven't done the work. We're going to sit down and do it together, because I find that forcing you to sit with me for 3 hours online, you're at your home, I'm at mine, we talk over the internet, you can ask questions as I'm going through the presentation to make sure you understand the theory. Then 2 weeks later, so you'll have some time to really get a good handle on the theory. 2 weeks later, starting Monday, November 21st until Thursday, November 24th, so 4 nights in a row, we're going to do 4 roughly 1-hour sessions where we're going to scan the market together. So just like we did today, where I scan the market, we're going to do that, but in a little more detail, because you'll understand the theory, so we'll be able to talk about it in a little more detail. We'll do that investor market scanning and evaluation of charts so that we can practice together finding the charts that meet the rules. And that is so valuable, because I always find that my students aren't fussy enough when they start out. And I want to teach you how to be fussy so we can do it in real time, real market conditions, try and find some things. Now, for those who choose to do the Active Trader course, which again, we're not talking about today, but for those who want to do that, that same week, I'm going to have education in real-time market hours. For the first 2 hours of the trading day, we're going to trade the market, and I'm going to show you the processes that I use to find day and swing trades. So from, I'm on the West Coast, so from 6:30 till 8:30 in the morning, we'll do that. If you're on the East Coast of Canada or the US, then it's 9:30 to 11:30. If you're in Europe or Hong Kong or wherever, we have people from all over the world watching these webinars, just adjust to that North American, basically market time, the first 2 hours of the trading day. As an added bonus in November, if you take the course, if you register for the course before November starts, I'll be trading all month, outside of 2 days. So all month, Monday to Friday for the first 2 hours, you can watch me trade, go through the process to identify stocks. The difference is in this week, I'm going to do a lot more teaching and really explaining. The rest of the month, I'll just be trading and telling you what I'm buying and what I'm selling. Real trades, things that I do with my own money, you'll see me make those trades live for the rest of the month. The only difference there is, I think November 17th and 18th, which is a Thursday and a Friday, I'll be in Las Vegas for the Traders Expo. It's a stock trading show that I go to every year. So those 2 days I won't be doing that. But other than that, the whole month I will be trading live for those who do that. All right, so if you register for the Investor or the Active Trader course before Tuesday, November 8th at 11 p.m., you will get that Foundation Live and the Strategy Application Series for free. Normally a $495 value. So again, Saturday, November 12th, we'll do Foundation Live. If you do the Investor course, you get this. If you do the Active Trader course, you get all 3 of those. Okay? So the Active Trader course, again, if you register before November 8th, you'll be able to watch me trade from the start of November until the end of November outside of those 2 days, all right? So there's a little bit of incentive, I suppose, to register before November 8th, but that's the drop-dead deadline to get this extra live training for free. Now, I know some of you bought the course last week. Of course, you get all this as well. So don't feel like you missed out on anything. Price. Investor course, $2,495. Active Trader course, $3,495. And the 4-month mentorship, which I haven't talked about today, is $54.95. I'll be doing a presentation on Monday about the mentorship course. It's the same material in the Active Trader course. The difference is for 4 months, we're going to have weekly meetings for where I really get into the fine detail of teaching this for you. I have found that people learn it better when they have that weekly push. It's like a class you're going to attend online every week where I'm going to teach this stuff. just a little bit about upgrading. If you take the investor course now and you want to upgrade to the active trader course 3 months from now, let's say, you're going to pay the difference, which is $1,000 plus $250. So that's the upgrade fee to go from one step to the next. So you save yourself a little bit by doing it initially, but if you want to sort of ease into it, then that's another option. So how to register for any of these courses, go to this address, stockscores.com/learn. Easiest way to find it is to go to the StockScores homepage, and right there in the middle, Learn to Trade with the StockScores approach. Just click on that, and it takes you to the Learn page. There you've got some videos that I have done on each course. So we haven't talked about the Active Trader course. If you want to learn a little more about that, there's a video there that you can watch. There's no information on mentorship here, really. I'm just changing the mentorship program. I used to do it one-on-one. Now I'm going to do it with small groups, which allows me to lower the cost quite a bit. And instead of doing it over 6 months, I don't think we need that much time. I think 4 months is effective. And so it's now a 4-month program with a small group of people online, you asking me questions, me walking through things in a lot of detail so that you learn how to trade the market. The emphasis is on active trading, but even if you don't want active trade, you'll get a lot out of it just from the process. All right, so I'm going to quickly just launch a little poll here, just as a way if you need me to follow up with you. I think I've got the poll ready. Yes, I do. Okay, so I'll just, whoops, sorry. All right, so if you can just answer that, and then I'll take some questions, and maybe we can look at a couple stocks if you want. What time is it? I don't even know what time it is here. Yeah, we've gone by pretty quickly, so you can take a few stock questions if you have them. So after the poll, I'll take a few questions. I'll leave that up for another 30 seconds or so. By the way, I'm not the kind of guy who sends out a bunch of spam and will bug you a year from now. You're going to get 1 or 2 emails from me if you say yes to one of these things. I'll just send you an email saying, here's the details. I don't push this on people. So if you want me to teach you how to trade, I think I know a lot about the market and I can help you, but I'm not a pushy sales type guy. So, all right, so we'll leave that up for another 10 seconds and then I will take it down. And again, if you have some interest in mentorship, I am doing another webinar on Monday at 6 o'clock Pacific time, 9 o'clock Eastern time. You can register for that on the StockScores website. It's free, of course, and I'm going to go through all the details of the mentorship program, which will start in November. I mean, obviously you'll get the live trading as anyone does, but we'll actually start with our weekly meetings, I think the 3rd week of November. Okay, so I'll take this down and then we can take a few questions. So if you have any questions for me, you can ask those now. And I can look at a few stocks for you if you like. Normally I do these webinars on my big computer with lots of screens, but I'm on my laptop this morning, so I don't have all the screens in front of me, so I got to kind of juggle this. Yes, this presentation was being recorded. So first question is on Bristol Myers. And let me bring up BMY. So Bristol Myers really got hammered in the last little while with some bad news. I think it is a stock you want to avoid. This is one of those stocks where it really comes out of nowhere and can punish a lot of people because this stock was in a really nice upward trend. Bad news, gaps down. That was the signal to sell, except it was way below support at the time, so you would have taken a much lousier exit on this than you would normally. This doesn't happen very often, but it does happen. But I think this is a stock you want to avoid. It's just overwhelming pessimism. Until it starts to build optimism, I would avoid it. Now, I love these kind of stocks for future opportunity because when they get beat up like this, eventually they turn and they have a lot of upside, but it is not the time yet. To buy it today is like trying to catch a falling knife, so I wouldn't buy that one yet. All right, I'll do a few more. It's quite cumbersome for me to, because I can't see the questions at the same time, so, oh, I don't have the screen up for you, sorry. It's coming up here in a second. There we go. So there's the chart of Bristol Myers, just so you can understand what the heck I was talking about there. Okay, so next one, WestJet. Let's do WestJet. So for Canadian symbols, you need a prefix. So we go up to the top of stock scores and punch in T.WJA. So the prefix for the Toronto Stock Exchange is a T dot. And there you can see the WestJet chart. It's been pulling back for the last 6 weeks. It's now at some support at the trend line. If I draw a line across these bottoms, see how we're right there right now? And it's actually starting to break this pullback right here. So it's very close to that. I actually like WestJet here. Is it a screaming buy? I wouldn't say that because it hasn't broken the pullback yet, but it could do that on Monday. So I think it's a decent entry point on WestJet. I'd rate it a 6 out of 10 right now. That can go to a 7 out of 10 if it can break that little pullback line. I'm going to take a quick look at a 3-year chart just to get a sense of, this is something called time frame confirmation that I like to do. Yeah, I think it's, you know, it doesn't have huge upside. You buy it here, you might see it move back to the $25, $26 range near term. Of course, WestJet heavily, you know, focused on the Western market, particularly the Alberta market. So with the slowdown in the oil and gas industry, their stock really got beat up. Oil and gas starting to stabilize, and many airlines are doing well. You know, look at the chart of Air Canada as a comparison. It's really outperformed WestJet. There's the Air Canada chart. So, you know, WestJet's been lagging. We may see it start to make a little bit of a catch-up. I'm going to do 2 more. And I'm sorry I can't do more, but it just takes me so long to pull up each symbol. So let's try T.CXI. Take a look at that one. And then we'll do an ETF. Yes, you can scan for ETFs. Someone asked me the question, can you scan for ETFs? Yes, you can. So let's do T.CXI. Good if you own it. I think we had a nice breakout on this chart right here. Not a super liquid stock, so liquidity a bit of a factor. Whoops. Yeah, there we go. So I think if you own this already, good, stick with it. If you don't own it, I would look to maybe consider it on a pullback. It's going to find some resistance at $38 a share, and that's the old highs. But yeah, I like it if you own it. I feel like to buy it now, it's a little bit late. You should have bought it at 30. It's now at 33. So you're $3 too late to enter now, but other than that, I like it. Let's take a look at Apple. So Apple in a nice upward trend. I don't think now is the time to enter it. It's kind of too late. However, good hold. If you own it, expect that it will stall this strength around 122. Of course, it's benefiting from Samsung's problems with their phones. So market is liking the stock, but I think the bus left the station already. The downward trend line, one of the things we like to do here is look for breaks of downward trend lines. So that was broken there from a rising bottom. Wasn't a great pattern at the time because it was kind of volatile into that break. But if there was any entry point, it was in that $103 price range. We're now at 117, so you've run up quite a bit already. It's just a little late to the party, especially since we're probably going to see the stock stall in around 122, 123 short term. I think it'll stall there, maybe go sideways for a few weeks, and then ultimately it could get back to its old highs around 132, 133. That'll depend a lot on what the Christmas season does for Apple with their products and whether they really pick up market share from Samsung because of the bad media that Samsung has suffered from their burning phones. All right, I was going to look at an ETF. So let me pull up, let's pull up a Canadian ETF. So the main Canadian index ETF is XIU. So you punch in T.XIU. We track them all on stock scores. You can scan them on stock scores, that sort of thing. Here's the TSX market. Actually looks pretty healthy. It's boring. It's been going sideways for 3 months, but it's building a nice base. Now looking at the 3-year chart, you can see we had an upward move. We're sideways here. If we can break out of this range, let's draw this little pattern here. This is called a pennant pattern. So if we can break to the upside out of this, it's probably going to head up to there. If If it breaks down out of this, that's bad. Then we'll probably test 20. So what you want to watch for is, do we break up through, let's call it 2175, or down through 2125? A break in either direction will telegraph where the market is likely to go next. All right. So let me just see if there's any other questions, and I apologize if I've missed questions. You can always email them to me. I'll put my email address up in a moment, but because I'm on this small screen, it's a little bit difficult here. How do you determine sector movement with your scanners just before the movements? You know, I don't think you can really detect any move before it happens. You have to wait for it to start to happen. And so whether it's sectors or individual stocks, you have to wait for the move to start to happen. So for example, on the TSX, let's just look at the Canadian market here. We had a really brutal downward trend here. This is all fueled by weakness in oil. All right, we've had a really nice uptrend in the last almost a year. And that started when we broke the downward trend line. So that is the start of the move. Now, yeah, you could say, well, Tyler, the move started down here, but that's a low probability trade to buy it here. You would have tried to buy it there, same kind of a signal, and ended up going much lower. So you want to wait for the trend line to be broken. Trend line was broken there, 19.5. So that was your signal that the Canadian market was improving. And since that time, it's gone up to 21.5. So it's gone up about 10, 11% on the market itself. So you have to wait for the start of the move to happen. Now, your question is specifically about sectors. Well, we have a tool on Stock Scores, which I haven't shown you today, called the Sector Watch, but I'll just jump over there. And I can look in this area here and see all of the different sectors and what their stock scores are. And if I want to look at the financial sector chart, I can click on that symbol and see that the financials have a pretty good chart pattern. And so that's another way to look for opportunities. This is a top-down approach. I actually prefer the bottom-up approach. Some people like top-down, so that's a way to do top-down using the Stock Scores tools. All right, so I apologize if I've missed your questions, any of them. Here's my email address. You can email me questions as you have them. And I recommend you follow me on Twitter, and I recommend you subscribe to my YouTube channel. These are free things I do. I try to help with some regular education. Every week on YouTube, I upload at least one video where I do my market analysis. So go to the YouTube channel, youtube.com/stockscores.com. Make sure you subscribe to the channel and you'll get updates as long as you have your updates turned on. And follow me on Twitter @StockScores. I put out little tidbits of information once in a while on Stock Scores. Again, if you have any questions, email me. There's my email address. And hopefully we'll see you at the webinar on Monday, which will be on there's where you register. Go to the Stock Scores homepage. There's the register link. Is the Stock Scores mentorship program right for you? I'm just going to walk through how I'm going to do the mentorship program this time around. It's 4 months, weekly meetings. We'll skip a couple weeks around Christmas, but other than that, it starts in November. And yeah, hope you've enjoyed today's presentation. Thank you all for joining me. I will be uploading a video of this presentation to YouTube as soon as I can get it compiled. And you'll get a link sent to you by email. If you don't get it, check your spam box or something like that, but usually people get those. So thanks everyone. Have a great weekend, and we'll see many of you on Monday. Thanks.